Internal Revenue Service IRS tax news. Child tax credit. Families with income changes must enter them in IRS online portal on Monday to impact November 15th payment. Spanish version coming in late November. But first, last week I set up a payment plan with the IRS and they said they were going to execute it. It wasn't the best plan, but it wasn't a bad one. Not so bad it needed to be executed like some criminal in Texas. The government has clearly become more authoritarian than I had previously thought. When I told them I didn't want my plan executed, but rather that they should implement it, the IRS said, okay, we'll give your plan a shot. Apparently, they were not previously planning on executing it by firing squad. IR 2021-211, October 29, 2021, Washington. On Monday, November 1st, the Internal Revenue Service will launch a new feature allowing any family receiving monthly child tax credits payments to update their income using the child tax credit portal, the CTC UP or UP, found exclusively on IRS.gov. So let's just give a recap of the child tax credit, how it works, and how this might fit into the feature of the child tax credit and the advance payments of it. Remember, the child tax credit typically is a credit that normally you would not get until you file the tax return, but they have this advanced child tax credit that they're implementing at this point in time. So the general rule is that for 2021, normally you would file the tax return by April 15th of 2022, qualifying possibly for a child tax credit and getting it at that point in time. What they're trying to do now is guess what that child tax credit will be so that they can send it out during 2021 instead of waiting until the tax return is filed by April 15th of 2022. How could they do that? They tried to make the estimate easier by basically making more or all of the child tax credit refundable, meaning even if your tax liability goes below zero, you would still qualify for the child tax credit. They also made the child tax credit larger so that they can then take half the child tax credit and still give you a credit at the end when you file the tax return and have a pretty substantial amount for many families then that they can then take half of it and allocate that half over to the second half of 2021 in the form of advanced child tax credits payments that you would get during the year. And then when you file your tax return by April 15th of 2022, you'll figure your child tax credit. Typically, you'll have to figure the payments that you got during 2021, which would normally be half of the credit if they got it correct. And then you would get still half of the credit basically when you file the tax return by April 15th of 2022. That's going to be the general rule. You can see there's some problems with this. However, even though they tried to simplify it, it's still an estimate because these advance payments are not based on the actual information on the tax return for the year considered 2021 because it hasn't been filed. Therefore, they have to base it on prior year tax returns 2020 or 2019 if necessary, or some other resources in events that they don't have that information. And you can imagine situations where things can still have a problem. For example, if you have a situation where a child was not born, you have a new child in 2000 or adoption or something like that in 2021 that wasn't on 2020, then you have a situation where they don't have access to that information based on the prior year tax returns, and the advance payments would not typically be correct, you would think. Also, a typical situation is split custody situations. Child was recorded on possibly your tax return in 2020, but will not be on your tax return in 2021 because of the custody situation involved. Therefore, the tax return or IRS will send the credit to the wrong person based on the information that will be there in 2021 because they depended on the 2020 information, which had a dependent that will not be there possibly in 2021. And then also, if there's an income limitation in terms of the phase out of the amount of the credit that you would be receiving, then if there was a substantial difference in your income level from 2020 to 2021, then they might get the amount of the credit wrong in terms of the income limitation. So those are just a few kind of problems that you can anticipate that, that are going to happen whenever you have this kind of prepayment situation. They're trying to adjust some of those problems as you go. If you go onto the portal for the CTC portal and tell them about some of these changes, then they may be able to adjust the advance payments so that they are accurate, so that when you file the tax return by April 15th of 2022, everything works out and you get the money as soon as possible, which is kind of their goal. We're looking into now kind of that income situation which could cause an impact on the child tax credit. Also note that if they do get something wrong, they've been kind of breaking out the child tax credit on a monthly basis, how much you would get per child on a monthly basis based on age ranges. But if there was a problem and you made a change to it, then those standardized monthly payments will be different, because if the change happened, they're going to try to compensate for it and adjust those monthly payments to compensate to give you basically the full half of the credit they're trying to allocate over 2020. So if they got it wrong and you gave them more information, which means that your credit would actually be higher, then they're going to try to increase the monthly payments to compensate for the fact that they want to give that whole half of the credit out during the year, instead of having those fixed amounts that they gave earlier with regards to the normal amount you would get per month, because that per month meant that you would have 6 payments over the last year, the last 6 months of the year. Okay, that's the general outline. So let's see what we got here. To help families plan ahead, the IRS also announced today that in late November, it will launch a new Spanish language version of the CTC UP. The IRS urges families to enter any significant income changes by midnight November 1st in order for them to be reflected in their November payment scheduled for November 15th. If a family is unable to make the changes in November 1st, enter them by the November 29th, so they are reflected in the December payment. Once the update is made, the IRS will adjust the remaining payment amounts to ensure people receive the total advance payment for the year. That's what I'm trying to get at with that babbling I was going on before. If you make the adjustment, they'll adjust the payment amounts, so they'll no longer reflect those kind of standard payment amounts they gave before, because those represented even payments over 6 months, and they're going to try to compensate for the prior payments being incorrect. So you're not going to, those standard payments amounts won't apply. If you make adjustments later on, you could get more than those amounts or possibly less. So the married couples, if one spouse makes the income update, it will apply to both spouses and could impact both spouses' future monthly advance payments of the child tax credit. Income feature right for some. The new income feature can help families make sure they are getting the right amount of advanced child tax credit payments during 2021. For that reason, it will be especially useful to any family who wants to raise or lower their monthly payments because their 2021 income has risen or fallen substantially compared to the 2020. So if your income has risen or fallen substantially in 2021 compared to 2020, then you could have a situation where there's a phase out in the amount of the credit that you would be receiving. And if the IRS is being dependent on the 2020 income, that then can have an impact on, how much the advanced child tax credit payments would be. So for example, if your income for 2021 was a whole lot higher than it was for 2020, then the IRS is going to be depending on the 2020 higher income, and that could have a negative impact, lowering the amount of the credit that you would be getting, even though your income is lower in 2021, and based on 2021 numbers, you'd get a higher than credit. That means that you get a lower amount of advance payments during the year. And if you told the government that, hey, your income is actually lower in 2021, you might then get the higher amount of the payments. If, on the other hand, your income for 2020 was a lot lower than it is in 2021, possibly in 2021, you're saying, hey, my income is going to be so high or above the level that I'm not even going to be qualifying possibly for the child tax credits, then the IRS would be giving you the child tax credit in error in that case, because you don't really qualify for the child tax credit based on your income level for 2021. And then if you told them what your income level is, then hopefully they would stop giving you the child tax credit. In that case, also, if you don't qualify for it, you might just tell them. It might be easier to say, I would like to opt out of the advanced child tax credits or something like that. But that's how basically these income level changes could have an impact on the amount of the advanced child tax credit. Now, I'm still kind of skeptical that if they overestimate giving you too much of the child tax credit, that they might not just say, we're just not going to, we're going to pass a law saying that we're not going to make you pay it back when you file the tax return. You can't depend on that, but they kind of did that last year when we looked at the advance payments basically related to the health plans, this health savings plans areas. So if they gave you too much money and you didn't qualify for the child tax credit when you file in 2022 for tax year 2021, you would think that means that you have to pay it back by lowering the refund or possibly owing taxes at that point in time. That's how it stands right now. But again, I wouldn't be surprised if they just passed a law at the end and say, nah, we're just not gonna enforce that or something like that. Again, you wouldn't plan for that, but I wouldn't be surprised. In any case, and in many but not all cases, a big income swing can either raise or lower a family's monthly payments. Normally, this means that small changes in income will not impact the payment amount and need not enter into the CTC UP. So in other words, if your income level changes not substantial, then it may not have an impact, because it's only going to have an impact if your income goes over basically the threshold that would mean your credit would phase out. And so that's when it would have a meaningful impact, and you possibly would need to make a change on it. So any changes to the monthly payment amount will be reflected in both the November 15th and December 15th payments, but only if a person completes their update income request before midnight Eastern Time on Monday, November 1st. Changes made after that date, but before midnight on November 29th, will only impact the December 15th payment, which is the last scheduled monthly payment for 2021. The IRS will adjust the payment amount to reflect these changes and ensure people receive their total advance payments for the year up to $1,800 for each child under 6 and up to $1,500 for each child ages 6 through 14. So let me just kind of break down what they're trying to say here. If I pull out the trusty calculator, remember before they were emphasizing the fact that you would get so much per month per child. And what they did is they said, this is the amount of the credit you would get, $1,800 for each child under 6. So if I took that $1,800 divided by 6, that would be that $300 per payment that they kept on talking about before that you would typically get. But what if their payments were wrong for the first few payments and then you made an adjustment to it? Well, then what they're going to try to do is adjust the later payments so that you still get the $1,800 in that case of the total payment. So that $300 monthly payment no longer really applies. What they're trying to do is get your payments to add up to what they think the proper, advance payment amount would be like in total for the 6-month time period, which in essence, I believe is half of the total credit that you would get when calculating the taxes on the actual tax return by April 15th of 2022. So that's the general idea. So who qualifies for the bigger payment? In some cases, families who are currently receiving monthly payments that are below the maximum may qualify to have their payments increased. This could happen if, for example, they experienced job loss during 2021 or for some other reason are receiving substantially less income this year. If the reduction in income is large enough, reporting that change now may increase the amount of their advanced child credit, the CTC payments, for the rest of this year. For any family already receiving the maximum amount, a drop in income will not increase the payment amount. Normally, the maximum CTC payment is $300 per month for each qualifying child under age 6 and $250 per month for each child ages 6 through 17. So if you've been getting the $300 payment for the entire time, then it's already kind of maxed out. You've been getting the maximum amount of the payment. If you've been getting something other than the maximum amount of the payment, and you actually qualify for the maximum amount of the payment, then that change that you could make then could have an impact on it to basically get the total advance payment to equal kind of the calculation we looked at before. Okay, so most families are receiving half of the total CTC through monthly payments. This means that any changes entered into the CTC UP will increase or decrease their monthly payments to ensure they receive half of their total expected credit before the end of 2021. So that's kind of how you want to look at it. You're going to say they're trying to calculate the CTC credit. They're trying to give you half of whatever that calculation is by spreading it over 2021. If they made an error or you made a change to that calculation, they're going to try to adjust the future payments to still give you basically half of what the total credit would be. So they will claim the remaining portion on their 2021 tax returns. So when you file for 2021, if it's all done correctly, you'll calculate what the actual credit was, and then your advance payments should add up to basically half of it. So then you still get half of the credit, in when you file the tax return, kind of like normal for the CTC credit. So who would have their payment reduced? Any families whose income rose substantially in 2021 should consider having their payments reduced. This is especially true if they are now receiving maximum monthly payments and they expect to qualify for less than the full credit when they file their 2021 federal income tax return. For more information on calculating the CTC, see Topic C of the agency's frequently asked questions. So they're basically saying, obviously if your income went up substantially in 2021, that could mean that you're getting too high of a payment because that increased income may lower the amount of your advance payments. And they're saying if you tell them that, then of course they might lower your payments. Again, you should probably do that, but the incentives they've provided in the past to me don't really seem like they encourage people to do that kind of thing, given the fact that if they overpay some of these credits, sometimes they just waive them at the end so if they give you too much money, I wouldn't be surprised if they just kind of waived it at some later point, because they've kind of done that in the past. But in any case, that's that. So in particular, where for families qualified to receive less than the full amount, you can see the QC4 and QC5. There's links to that here. If they give you, anyways, we'll move on here. Using the portal to report income changes, only families who are already eligible for and receiving advanced CTC payments based on their 2020 tax return can use the CTC UP to obtain their income. Note that someone who filed a joint return for 2020 can only update their income if they plan to file a joint return for 2021 with the same spouse. IRS representatives cannot process income changes over the phone or at taxpayer assistance centers. After an income update is completed, the update portal will acknowledge a change was made, but will not display the change. Likewise, IRS representatives won't be able to confirm that an update was made. Low-income families can still sign up. It's not too late for low-income families to sign up for the advanced CTC payments. The IRS urges any family not already receiving payments who normally isn't required to file a tax return to explore the tools available through IRS.gov. These tools can help determine eligibility for the advanced CTC or help them file a simplified tax return to sign up for these payments, as well as economic impact payments, and receive the recovery rebate credit. The deadline to sign up is November 15, 2021. People can get these benefits even if they don't work and even if they receive no income. Families who sign up will normally receive half of their total child tax credit by December 15th or on December 15th. This means a payment up to $1,800 for each child under 6 and $1,500 for each child ages 6 through 17. So in other words, if you hadn't got the advance payments because the IRS doesn't know about your information, possibly because you haven't filed a tax return or something like that, then you could file a tax return or possibly use that portal to give the minimum information. And if that was the case and you qualified, then the IRS would try to give you that whole amount, the half of the credit that you would be receiving on the one payment remaining, which would be for the $1,800 or the $1,500 for the two age child groups that could be in place. So if you haven't been receiving any payments, or someone hasn't gotten any payments and they would qualify for those payments, and then you need to provide the information, and you might still qualify for those advance payments. If you don't, then they could file the tax return by April 15th of 2022 and possibly get the refund at that point. So, and that would be for the full amount, not just the half amount of the prepayment. So get ready to file next year. Early in 2022, families will receive letter 6419 documenting any advance payment issued to them during 2021 and the number of qualifying children used to calculate the advance payments. This letter can help them accurately reconcile the advanced CTC payments they have received and claim any remaining portion of the CTC when completing their 2021 federal income tax return. So the IRS is going to try to give you this payment thing, because remember, when you file your tax return by 2022, April 15th, you're now going to need to calculate the payment and know what your advance payments were so you can subtract them out to get the amount that would be remaining, which you would think would be half that you would still be receiving. Note that if you're a tax professional, you also might want to ask your clients to get onto the to their IRS portal, because they might not be giving you this information, and you know you're going to be asking this all the time. So you might want to try to get your clients basically signed up to the IRS portal, so any of these kind of advanced payment things they can start to look up, hopefully on their own. And when you ask them about it, they don't have to go through the process of signing up. They can get on their portal and look up, did you have any advanced payments? And, did you get any kind of stimulus payments and all this kind of stuff? Hopefully that stuff will start to be logged in on their portals, which can take a little bit of time to get logged into the portal. So I would try to get the clients possibly in there, so that you can start asking them these questions and get the responses fairly quickly, hopefully. So the income change features joins a growing set of services available through CTC UP, available only on IRS.gov. The portal only allows families to verify their eligibility for the payments, and then, if they choose, switch from receiving a paper check to direct deposit, change the account where their payment is direct deposited, update their address, or stop monthly payments for the rest of 2021. Latest information available on IRS.gov. The IRS has created a special Advanced Child Tax Credit 2021 page. That sounds like they need it right now. This is a little complicated, but designed to provide the most up-to-date information about the credit and the advance payments. It's at irs.gov/child tax credit 2021. There's a link to that here. The agency encourages partners and community groups to share information and use available online tools and toolkits to help non-filers, low-income families, and other underserved groups sign up. People can check their eligibility by using the Advanced Child Tax Credit Eligibility Assistant. The web page features a set of frequently asked questions, a user guide for Child Tax Credit Update Portal, publication 5549. It also provides direct links to the portal, as well as 2 other online tools, the non-filer sign-up tool and the Child Tax Credit Eligibility Assistant, and other useful resources. There's links to that stuff here. There'll be a link to this in the description.